October 17, 2019, Thursday. Ton of cool trades going on, guys. Here's some cool things that we're observing with the market. So the banks are clearly holding the markets above the sea level, but will Fed sink the Titanic? I think the answer is yes. The Fed is not likely to lower the interest rates by the end of October, and if that does take place, expect a huge downturn in the market. Some of the things pointed to a move lower despite of the market continuously trying to gain some momentum higher. Number one is the divergence between the market and the VIX. Market is up, but so is VIX. Number two, Brexit deal done? Hey, looks like Brexit deal is done. At least that's what they're saying. But if the deal actually gets done, I think there's going to be some crazy volatility out there in the markets. That's another catalyst to propel the markets lower. Now, the biggest one of all today is Germany cuts GDP from 1.5% to 1%, basically confirming that the fears of the global recession are very much real, and this recession is escalating at rapid rates. Number four, everybody's cutting target prices on Netflix this morning, so we're expecting, despite of an initial pop, initial bounce, we are going to short that bounce today, expecting the black bear candle to actually materialize by the end of the day on the chart of Netflix. Some of the easy trades you could be taking today is IBM, URI, UNP, Amazon, and Netflix. Question of the day, one of the biggest divergences observed in the cloud sector. The question is, what do next 5 charts have in common, and how does that relate to Amazon? Chart number one, workday. What do you see? Got move 11 right here, followed by a drop from 185 to 156.86. Workday is one of the all-time institutional favorite stocks in the cloud sector. If you focus on a broader picture here, you'll see the shoulder right here, the head formation right here, represented by this move 11 and another shoulder. So there's actually potential when this thing bounces that it could drop even lower from here. So basically, move 11, head and shoulder, and cloud. 3 things I want you to focus on when you look at this chart of workday. Second, victim, ticker now, NOW, service now. Same thing. Here's your move 11. Here's your head and shoulder. Here's the big drop. Cloud. Same identical 3 things on this one. CRM. Move 11. Head and shoulder. Cloud. VEEV. Move 11. Head and shoulder. Cloud. IBM after earnings. Here's another cloud play. IBM has been diversifying, acquiring companies such as Red Hat to be a leading player in the cloud sector. And guess what happens after it reports earnings? After continuously moving higher for quite some time, just like the rest of the 4 charts I've just shown you, IBM drops like a rock all the way from 143 down to 133 after hours. We are buying IBM puts, 135, 130 strike at the market open. Hopefully it's going to bounce, create a little better opportunity for us to short. Hopefully at least it'll give us a chance to short it around 135, 136. We are expecting IBM to touch levels 122 and 128. That's where we're going to collect the profits on this one. But all these charts I've just shown you guys, remember, the 3 common things that they have is the move 11, is the head and shoulder, and they're all in the cloud sector. Now, I want you to take a slightly different look at the same chart of workday. So all the things are here. Now, notice, as the stock moves from here, as it gaps up right here, as it moves here, and it moves higher and higher and higher, when it gets to 185, nobody thinks that it's about to drop because this part of the chart just looks so damn bullish. So when things just continuously move higher and higher for a few consecutive days in a row, that is the least probable time of you actually thinking that this thing is about to tank. But that's exactly what happens, again, if you have move 11, if you have hand and shoulder, and if this is a cloud play. How does this relate to Amazon? Guys, the answer is simple. Focus on this red square. Now, this is the red square in Amazon. From 1739, right around here, we're saying, hey, buy some calls. Right around here, we told you to buy some puts, okay? Now, temporarily stock drops again. All of these are move 11s, okay, leading us to this move on very low volume today per market, 1797. Now, this is the least probable time if you actually think about shorting this thing. But yet, this actually represents the greatest time because the next move is right here. just like the other charts that I have shown you. Now, Leonardo, why do you call this a divergence? Well, because all the other cloud stocks that have moved 11s and head and shoulders, they all drop like a rock shortly after. Now, the only stock that have not tanked yet is Amazon. So, for the meantime, we actually seen a divergence. But Amazon is the largest cloud player out of any other company out there. So, we're saying that this is the red square preceding to this actual drop that is about to take place, because this particular pattern that we're observing of move 11s is seen right here at Amazon. It is developing the head and shoulder. It is highly bearish, death cross still on the longer time chart frames. And as pointed out yesterday, okay, this could be an ultimate time frame to short. Now, as we go for some of the other charts in this video, I want you guys to focus on this formation. So basically a death cross, okay? After that, the stock shoots up, okay? And typically after that, you will see a move lower. I'm going to give you a couple of examples that highly resemble this chart. So print this chart out and then print a couple of other charts I'm about to show you so you would know exactly what to do when this pattern actually takes place. So with that said, there are move 11s observed pretty much all over the place. They keep happening. They represent the top. Just because things don't immediately drop does not mean that we're not at the top. So CLF 20, oil futures, move 11, move 11, move 11, struggling to break above that level of 53.40, 53.80, 53.60. Right around here is where all of this move 11s form. Now, clearly, if you were to draw a line, it's just a series of lower highs continue, which ultimately moves oil lower from here. Again, we're watching for this very important level in oil of 52. If oil breaks 52, buy puts, as many as you can freaking get, because that market is going to go substantially low. Now, considering Netflix 310, 350 puts on any bounce to this 315, 320 area this morning, but get some Netflix puts at the open. So stair step. Basically, it could open anywhere between, let's say, 305 and 315. Let's say if it opens at 313. I don't want you to wait till it bounces all the way to 315, 320. Just buy some here because it may never bounce to 315, 320. Okay, but if it does bounce, and let's say it opens at 315, 320, that would be an ideal entry. Ideal entries you see would coincide with this high that was set yesterday. We actually had a drop to 265 followed by a bounce, sharp drop back to this low threes, 305, 308. And looks like we're just revisiting this area here. So very likely it's to keep maybe sideways before the market open, about 308, 313 area. So buy some at the open, but buy these strikes, 310 and 315 puts, in the expectation that at some point in the day it will revisit this 295 level. Now, once it gets to 295, it's probably wise to take some profits, okay, because the probability it would actually reverse all the way to 265 is not as great. Okay, but nonetheless, you could see it potentially go a little bit lower, below 295, maybe 291, 292. So there is a move lower here in the cards. As you can see, all of these move 11s on the chart of Netflix. So if it does reverse and make that formation, you'll see a black candle on the daily chart of Netflix. Still targeting shorting any bounces to this 2994, 3004 level area. Market as time I'm recording this is about 3,000. So we're right in that area of shorting and buying puts. Some of the cool companies that announced its earnings last night was Netflix, URI, IBM. This morning, UNP is looking like a great trade, guys. SNA still waiting for a reaction on that. Honeywell, BB&T, the banking stock just continue moving higher. Morgan Stanley beat the earnings expectations, even though in relation to the previous year, the numbers don't look as great. But nobody's paying attention to that as long as they keep reporting these lowered expectation beats. Then, these temporarily, these banking stocks are going to move higher. Now, they're reaching some key resistance levels, so the momentum of them moving higher is actually going to be decreased and sustained here probably in the trading tunnel for some time. So, all of a sudden, the market was able to rally a couple of days in a row because of the great earnings, or what appears to be the great earnings from the banking sector, but that's about to stall out. Considering all the other negative factors that are about to hit the market, the move lower is very much in the making here, guys. So URI, here's another easy trade we're considering this morning. URI 120 puts after the market announced the earnings after hours yesterday. It jumped to 126, dropped immediately to 115. Trying to track higher today, this morning, to about 121. 120 area. I'd like to use this opportunity to short it right here, buying the 120 puts in expectation of the stock actually revisiting yesterday's lows of 115, possibly even going all the way to 111, 112 area. Here's what happens on the chart, daily chart of URI. Now remember, a couple of conditions I pointed out to you on the Amazon chart is exactly what's actually happening here on the URI chart. Remember, the pre-existing condition of a death cross, Amazon is moving higher. This is exactly what was happening on the chart of URI. Now notice what happens after that. It drops. Okay, now it bounces back to the key resistance level, and last night it drops. Slight bounce back to the 120. It's likely to drop back to 115 or revisit the 110, 112 area right here. So these are our targets for collecting profits on URI. But this chart highly resembles the chart of Amazon. UNP 160, 155 puts on any bounce so far. UNP is at 159. So if it bounces back to like 160, 162 area, we want to buy puts right here. 160, 155 puts, an expectation of much bigger drop. Now look at the resemblance between Union Pacific chart. Now this is a transport stock. It's got nothing to do with Amazon chart. But what we are noticing, and you guys know, in the study of the history of the markets cannot hit all-time highs without transport participating. So unless all of a sudden, you're going to see UNP reversing and going to the moon today, the probability of markets actually moving higher to all-time highs above a level of 3,030, that would actually get us to all-time highs, is not very likely. So watch UNP behavior today, because if it drops and they don't buy the dip in that, it tells you very much that this is another confirmation of a market top. Again, what are the conditions? Death cross. After the death cross, you got a pop right to the resistance line. This is a great entry. The stock is already down a little bit pre-market. It missed the earnings. Everything lines up to this stock potentially visiting 155, possibly 150 level. So collect some profits on your 160, 155 strikes when the stock hits 155. Just below that, maybe 154 area. And second target would be 150 bucks. When it gets there, close out the entire position. Yesterday, on October 16th, Wednesday, was a move 11 with a clear behavior and characteristic of a move 3. This is how it looks on the chart. What makes it a move 3 type characteristic and behavior is the fact that this move 11 actually happens in negative territory. We basically dropped down initially, and then we created this move 11 type formation. And you can clearly see the market opened and closed right about the same area where it started the day. So basically the market gaps down, it goes lower, then bounces out into a pyramid formation, which is exactly what move 11 is, drops lower and maintains the level where it opened. Nice and easy. Move 11 in a negative formation with a clear behavior of the 3. 2-day sequence is 111. 111 is a sequence that have an equal probability of the next move higher or lower. But considering all these move 11s that we're not just seeing on the chart of S&P, but we're seeing it in oil, we're seeing it in a lot of sectors pre-market. That gives us actually a more of a probability the market move lower today rather than higher. So move 1 followed by a gap lower, followed by a move 11. And as you can see, that 11 basically stops out exactly before it hits the level set by the prior day. So overall, there's actually a very bearish 2-day sequence. 5-day sequence is 7, 6, 5, 1, 11. As you can see, that 6 followed by 7. That does not happen very often. 5-1, couple of days off the odd formation there, and an 11, 6 and 11. If we get another 11-6 type formation today, guys, the market is heading substantially lower. All these move 11 formations created on a 5-day sequence, we simply cannot ignore them. So despite of the bullish action pre-market, the move lower is in the making. We're expecting either a move 6, 2, or 11, and if the reversal does come, it should definitely take place right around 10:15, 10:30 today. If it's a move 6 formation, then we should see a sharp drop of between 2 and 4 p.m. Clearly, VIX is downtrending, and it's low numerically, but it appears that it's definitely setting a low. As the market is creating move 11s pre-market, VIX is actually making sort of a move 13 type formation. It's dropping lower, and then it's bouncing. Now, interestingly, again, it's VIX is moving higher as the market is moving higher. So we're actually seeing a possible TRO reversal. We made a case for it yesterday. We are continuing to make a case for it today because the probability of a VIX reversal to the upside is highly likely at this point. It is in the lower trading part of the tunnel, and that's where we want to come in and buy VIX calls. Now, short any intraday bounce anywhere between 2994, 3004. Expect volatility to spike because of all the different things like Brexit, the German GDP data, short cloud stocks and semiconductor stocks, oil stocks. If oil breaks below 52, buy more puts. Guys, it's going to be a beautiful day. Short the hell out of UNP, URI. Let's rock, collect some gains, and get ready for a huge day tomorrow.